You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central, 1 p.m. Eastern. Do you know where crude oil is? Yes, it's time for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this right now. If you like what you're listening to and you spend a lot of time listening like a lot of folks are these days, make sure you head on out to your platform of choice. Put a review out there so other folks can continue to discover this network. A lot of people need this kind of stuff these days, and they're searching throughout the hinterlands to find some good stuff. So help them out. Leave a review out there in your platform of choice. And, of course, keep those questions coming. We do love to hear from you guys. And joining me on the old program today, let's go out first to that quiet, that sleepy, that tranquil hamlet where they don't run on crude. They run on their own optimistic outlook for the future. Yes, I'm talking about St. Charles, where we are joined once again by Uncle Mike TOSAW from the appropriately named St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here on a Thursday. We got a lot going on today with oil, and now we got a breaking news with Gilead and the remdesivir, and this is going to be a fun show today, folks. Stick around.
Should be an interesting one. I'd be curious how many miles per gallon you get on that optimistic outlook for the future, but that's a conversation for another day. Let's go out to the place where that optimism goes to die. Yes, I'm talking about the hinterlands of Maine. We are joined once again from the GIOVINAZZI compound by the Rock Lobster himself, Mr. Andrew GIOVINAZZI, from OptionPit.com by way of Carmen Line Capital. Yes, he was social distancing before it was cool. He just called it life. Now we call him the Rock Lobster. Mr. Rock Lobster, welcome back to the program, to you as well.
Now you call me prescient. He is prescient. He was far, far ahead of the curve.
Yes, you were very prescient indeed. As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get to it. A whole freaking lot, I think is a technical term, of stuff to talk about here. Of course, the Trading Block, the portion of the show where we break down what is trading. And, you know, it's one of those markets where wait 5 minutes and you get a different story than you had at even the start of the show here. Coming into showtime, we are seeing the VIX at about 41. So that puts it actually slightly up, or it's close to it, from where it was last show. Last show was about a 40, so up a little bit. It was at a 39.5. It had rallied a little bit. We also saw VVIX at about a 117.5. That puts it down about 7.5 handles. That's back down now in a still a very elevated range, but this is a range we could do stuff with. This is a range we've seen before and we'll probably see again, and not something that's out of complete realm of nightmares like we saw not too long ago out there in VVIX. And our old friend VXX, I should say, coming into showtime, was north of the 43 handle. It was about 43 and a quarter. Actually, it's up a little higher now. It's threatening the 44 handle. That puts it up almost 4 handles from where it was this time last show. So getting a little bit of juice back in the old VXX. And just to make it fun, our friend OIV, a.k.a. the VIX of WTI, which is now 731, a.k.a. a completely meaningless number, because once CL goes negative, all bets are off for that number. Yeah, let's get into it then, because as Uncle Mike mentioned, we were looking good, we're looking strong, and it's been a decent little week out here, except for, of course, some crude issues. We'll get to that in a bit. Maybe some of the early optimism about the Gilead treatment perhaps starting to wane, perhaps some of that weighing on the indices. Now we're seeing most of the major indices up about 0.75% or so. The NASDAQ up about 0.9%. So still up, but perhaps going to give some of that back. We'll see as this Gilead news starts to percolate out there. But what has been percolating for some time, mostly in the wrong direction for the bulls, has been crude oil. We all learned. In fact, hey, our audience was prescient. I believe it was Tony, one of our regular live listeners, who asked if crude could go negative. And we kind of discussed it, but it didn't seem, even then when we were on the cusp of it, it was one of those things that we knew was theoretically possible. It had been discussed in, obscure economic treatises about, what would happen in the extremely aberrant scenario where storage costs and other things are going to outpace the price and demand for it, and you have to just go negative. So theoretically, it was one of those things that could be possible, but it's not a thing we had ever seen. In fact, there's a great chart put out here, and we'll get more into it on TWIFO. It's going to be all about crude, so don't worry, listeners. It's the 150-year history of crude oil and how that negative price pretty much puts it below the price where it was back in 1870, which is just saying something to parse it. But yes, we did go negative. People, of course, there's been historic demand annihilation out there as a result of this coronavirus pandemic. They're saying the estimates are around 30 million barrels a day. That's the latest estimate out of the IEA, which, of course, OPEC struggled to maintain and produce a 10 million barrel a day cut. Even people then said that's probably not really sustainable. And yet 10 million, 30 million, you could see it's very basic supply and demand and ain't going to do it. And so we talked last week on TWIFO about how it seemed like people weren't really buying into this. The call sellers, once again, were fading any sort of cut out of OPEC, and that seemed like it was depression action. I don't think anyone expected it to get as dark as it did. We saw that front month future get down to around about minus 40 or so down there, which is just a complete insanity. We're now in an environment where CME is listing negative option strikes. Just think about it. Let that percolate in your brain for a little bit on the WTI contract. So what does this mean? This means for a lot of products you guys like to trade, like USO in particular. Some of you like to play in the WTI, but a lot of you like to play in USO. They are obviously inextricably linked, WTI and USO. You can't really have one without the other. USO, and I've said it many times before, I'll say it again, this is one of those Franken products that attempts to replicate a futures position using a variety of other contracts to do it. And these things are going to live and die based on their construction. And USO clearly now having some issues. This thing coming into today was effectively a contract that tried to replicate that front month WTI contract and would roll at a set date every month. It was kind of a predictable beast. It didn't do a great job of tracking WTI, but you knew what you got. And as long as you understood the negative roll yield aspect, which in these environments is not good, then you knew at least what you were getting. If you expected one-to-one tracking of crude oil, look elsewhere. Probably WTI would be a safer and more direct bet out there. Of course, negative. Nothing's really safe anymore. But now we saw that changing now. We're seeing USO having to adjust and add First off, they added a 20% exposure to the second month. That was a big change for them to give them a little bit of cushion. And that helped them when all this madness happened in the front month. The fact that they had already rolled as well out of the front month also helped. They weren't part of this massive negative sell-off out there. Then, of course, you saw them now halting new issuances as a result. Now they've changed that old structure completely, partly due to position limits. They acquired... And again, we'll get into all this on TWIFO a bit. They were exceeding the position limits in WTI. They could not there's so much money was flocking into USO. They had to put it somewhere. They couldn't keep piling it to front month WTI. They were blowing the doors off the position limit. So they started adding the 20% second month. And now the jig is up in terms of they're just going wherever they have to go. As of Wednesday, as of yesterday, the structure was 20% front month, 50% July, 20% August, and 10% September. Yes, September. So they're going that far out in the curve now. So they are playing a bit, trying to make this thing not be the next XIV that implodes under the weight of the madness out there. They're actually spreading it out a little bit, and that seems to be helping a little bit in terms of mitigating some of the impact of this madness. We know the farther off portions of the curve, not quite as crushed. There's a steep contango out there, and now people are pricing in a pretty aggressive return to some semblance of normalcy in the near future. On top of that, of course, we got the jobless claims, 4.4 million to this week. That puts the total losses at 26 million total jobs since all this madness first started spinning off. If you're wondering, by the way, total since the end of the Great Recession in 2009, the economy has added about 23 million new jobs. So all those new jobs plus 3 million, they went bye-bye as a result of this. So a lot to unpack. There's more I could say, but let's kick it off. Let's go back around the horn and start the opposite of the way we came, because the Rock Lobster hasn't been on in a little bit. Mr. Rock Lobster, what's your take on all this freaking madness? You know, we got USO, we've got OIV, we've got VXX. I see Valman is making a return appearance as well. What is on your brain today, sir?
So I was talking to myself for quite a while.
I'm sure that was very, very scintillating what you had to say to yourself, sir. Very impressive.
No. So one of my students, Steve, he sent me that snap of the VIX term structure 1 month after the market bottom. So it was a market bottom in 2009, like March 2009 sometime. And what's funny is the front end of the curve is almost in the exact same place 1 month later. So if we're assuming that 2200 or so, we had that about a month ago, it is the near term market bottom we had. Front end of the curve, very similar. What was different is the back end of the curve is actually quite different. So almost the entire VIX curve was pancake flat back then, and now we actually have our curve is still fairly backward. So there was, 6-7 month fall was 37, and now 6-7 month fall is around 30 currently. So that was the biggest difference. So very, very interesting when you look at it from that perspective. And I think, to be honest, it had to do with, the Fed basically is like they're trying to create liquidity everywhere they can. Congress is giving the average person. And, it looks like, at least from the way the vol curve is talking, again, I'm not trying... Not because everybody has politicized this issue, unfortunately, to a massive extent. But right now, the vol curve basically is predicting a lot less vol in the future than we did in the financial crisis. So where you are relatively in the same place. I mean, from market lows. So now, even though the financial crisis, things kind of really started coming off the rails in October of 2008. And, everybody was freaking out after the election, and then March, and then what were they going to do with TARP? But if we go with the assumption that TARP passed, Obama signed it in like March or something, 2008, or TARP 2, I think. I can't quite remember, but something like that. So, and the Fed has been acting super proactively right now, and, they're injecting money in, and they could pull that money out when things get better or when people go to work again. But the big difference is the net vol cost for uncertainty is a huge discount right now, just current. So, clearly, though, the market is coming off the bottom, and the market came off pretty hard off the bottom in 2009 as well, once people started seeing TARP and the smoke cleared a little bit. And as of right now, it's pricing less vol. So to me, less vol, less risk. And at least the way I look at it, the market thinks that less vol, less risk, people are going to go back to work. It could be bad, but I think, at least from a vol point of view, they're essentially going to deal with it. The way that the VIX numbers are pricing, that's how I interpret it. So I thought that was interesting. That's kind of where my head has been on this. As the market has been kind of rallying, we've sort of flipped the switch from worried about if we're all going to survive this COVID-19 thing to, okay, it's a problem. It's a problem for people with pre-existing conditions and certain, like, that's 99% of the problem is looking at the stats, at least out in New York and in Europe. And can we get past that? So I think now the market's flipped from we're worrying about this freaking disease to now we're worried about what kind of economy do we have left when we all go back to work. And the biggest vol shocks we've had actually have been due to oil. So if you look at it, when the Saudis decided to just flood the market, maybe their timing wasn't great. They probably would like to take that move back if they could.
Yeah, I think they want to do that one, want to do over on that one.
I think they want a mulligan on that one. Like, whatever the crown prince's name is, I don't know. He's like, I'm going to show them. He's like,
that's why these economic models don't work for things like, that in these scenarios, because they don't account for human idiocy, right?
No, they do not. So I think he would take that mulligan. I think he would say, okay, why don't we, maybe I should just talk to Putin. He and I should just have a phone call. So I don't think he expected to sell oil for zero. I don't think that is what or negative. So I don't think he, obviously he's not WTI, but still, anyway. So what's now, I think, driving vol. So if you want to look at vol, I think anything that has to do with how we get back to work, the fact that nobody wants to drive, there's no demand. These are like real economic problems. These are real economic problems for oil field workers in the U.S., which is now a huge employer. And anything related around car and travel, like these. So these issues, I think the market's flipping to, it's flipping to what the heck is going to go on and what kind of economy are we going to have? And the fact that we can't sell oil and there's no demand is really bad. And rightfully, that's what kind of took VIX down, took VIX up early in the week, took the market down. And since then, we've kind of been, recovering. So those were massive, what I would call mechanical dislocations. When you're trading stock options and derivative securities in general, a short squeeze is a dislocation, meaning the mechanics of the underlying products get so distorted that like regular models and stuff don't really work. Because remember, models just they make assumptions. And, when they don't work, when things are broken, when there's a mechanical break in the assumption in the model, and this is something I teach my pro students, you kind of have to throw all the sheets away. You remember back in the day, Mark, you're like, I'm taking my sheets and I'm throwing them on the ground because this ball is going to 1,000,000.
It was like trying to model theta on Expiration Friday back in the day. You couldn't do it. Your machine blew up.
Right. And actually, I was in session with a student on Monday, and I was trying to explain to him, like, I'm buying June, I was buying January 4 strangles for $2. And he's like, why would you do that? And I go, okay, you don't understand, man. This is crazy town. USO as a product was just $6. The vol this is stupid, right? And the next day, the strangles were like $3. Almost all intrinsic value to zero. So, but everybody forgets, things can go down, but they can also go back up. Right? Like how you're trying to price January volatility. And in the last 4 months, oil had been, USO had been as high as $11 or $12, right? And that's oil, $40, $50. So you're forgetting that they're trying to price an 8-month away event when the short-term volatility is like 1,000%. You can't be priced. Therefore, in my mind, it's all too cheap, or it was too cheap. I actually just sold it all just because it was too much. It was worth selling because I made money, right? So I'll sell it. So those are, I think, these are from a vol point of view, oil and sort of actual real economic demand shocks. I think that's the thing that's kind of setting VIX up. And what I would say, the back end of the VIX curve has not recovered from Friday, meaning everybody was kind of okay on Friday. And now this new oil thing, vol, those futures have not gotten back to that Friday level. Not even close. So there was a bid did appear in them, and they have not gone away so far. So, it will be good because I did sell a little bit of that long end, and using ZIV, and we'll see how it goes. But it has not come back yet. I expect it to come back because I think as this sort of news percolates out and people kind of get back to work a little bit, and the dust clears, I think that could be I think it could be a trade that could work. But anyway, that's sort of that's where Volman was, and that's how he came to be today.
No, it is crazy. We had Brian on our OPR show not too long ago talking about a pretty pricey straddle in USOs, and that was a home run. It's just, these are crazy times out there, listeners. Speaking of craziness, let's look really quickly what's cooking out here with this whole Gilead. This is, of course, the reason the market was rallying not too long ago, was this, some might say, misplaced optimism on this drug coming out of Gilead here. It sounds like a research on a clinical trial was leaked accidentally by the World Health Organization. It was accidentally published, and the FT got a hold of it. And that early trial said they studied about 237 patients, gave the drug to 158 of them, and compared their progress with the remaining 79, so a little bit of a control. And they said that the story indicated the drug showed significant side effects when some with 18 patients taken off of it. So not perhaps the panacea the market was hoping for not too long ago, and that helping to stem some of the gains out there. We're seeing most of those gains coming off now. Still not negative, but we're seeing the Dow up about 0.5%, S&P up about 1/3. So giving back a lot of those highs. Mr. Uncle Mike, sir, a lot to unpack there. What is on your radar today?
Well, I think that is the big story. It was literally, I was kind of watching the markets right before we came onto the show, and I'm like, whoa, what's going on here? And then that's what's happening. And so it still doesn't seem clear whether or not the drug is bad or good, because Gilead's saying that the information was not supposed to be that information was not supposed to be said, and that we don't have enough statistics to prove it one way or another. And we still could have some good things, whereas the news is saying, oh, it could be bad. So we really don't know the full story on that one as of yet, with where we're going on it. So I would definitely stay tuned for that one, to say the least. Now, here's a question that I have for you two option trading veterans that have been in the business longer than I have. If we have negative option strikes, does that mean that the delta on a call becomes positive when oil goes negative, and the delta on a put is positive when oil becomes positive below zero? How does that work? Do you guys have any clue on that one?
Does it flip the signs of the Greeks?
Yes, I was wondering that.
That's an interesting question. Can a call theoretically have a negative delta in that environment, and vice versa?
No, it hasn't. We have not popped up yet. But you have to be honest. I think it just works the same way. I mean, you certainly don't want to exercise those one calls, right? You don't want to exercise the zero calls. You just put the.
How do you exercise a zero option?
Well, you don't want to, because it's settled negative, right? So, don't exercise the zero. So I just think you stick a negative number in there, and you have negative strikes. And I haven't even. It's been so long since I actually looked at the Black-Scholes model. I could be totally wrong on this, but it's like, how do you price a hard to borrow? In Black-Scholes, right? You just run a negative dividend in there. So, I think you could just fudge the numbers a little bit, because when you're trying to do a hard to borrow, like all of a sudden, the interest rates are all backwards. So, you could just fudge the div to create a borrow rate. I think you could do the same. I was just assuming you could do the same thing.
Yeah, because your delta still works the same. I mean, the negative sign for the put just shows the inverse correlation, right? It's the delta is still working. A delta of 75 is still a delta of 75, even if you're in negative territory. It may be horribly terrifying, but it still works that way.
Yeah. Those two puts kicked in big in WTI. Who would have thought the two puts would have gone to $40? Who knew?
People were hitting me up saying, it was at like 20 cents in the front month there. I was going to take a huge flyer. Thank God I didn't. They didn't know it can go 40 handles against them.
Can you imagine exercising a two put and making $40 on it? Oh, my God. It's like a home run. My gosh.
Now, let's be honest. But between the three of us, who would have thought 2 weeks ago or whatever, I'll be honest with you, I was not aware that commodities could go negative. And I don't trade commodity futures. I have at times, but I was not aware that was a possibility. Now, honestly, would either of you guys have known that that's even possible?
Yeah, that's the thing that, we talk about. We have all sorts of, obscure econometric people on the network and stuff. And these are the things you see in some of their obscure research where, you have to have all these scenarios. Like we were just talking about with Andrew earlier. You have to have not just a pandemic annihilating demand, but you have to have the sheer idiocy of a price war on top of that, throwing fuel on the demand annihilation fire to the point where it drives through the negative strike. So you have to have some degree of human irrationality at work in there, which is why it's such an obscure thing. But theoretically, if you think about it, any sort of physically delivered thing, if the cost of delivery and everything that becomes astronomical and the demand for that storage becomes hugely inelastic at an extreme moment, these things can go negative. It can happen. And so it's a thing that's I've always known was theoretically possible. But even last show, when our listener asked about it, I kind of laughed. I said, I'm not going to say no because we're in that weird environment, but it takes a lot for it. And now it took enough as it happened this week, sir. So yeah, we are, it's a thing that's been theoretical, but I always laughed about it because it's one of those things that, the dismal science says it's possible, but in all probability doesn't happen unless you have the Saudis and the Russians and everyone else acting like completely insane, crazy people. Then it happens.
So let me ask you this. Is it possible for a stock to go negative then?
Well, you don't have the same delivery issues with a stock that you have with a physical commodity. You don't have to get your Apple shares to the broker, right? And do a pipeline or have a giant, there's no giant barrel of Apple shares you have to buy space in, right? So right. that changes the dynamics a little bit.
But what if in theory Apple had $1 trillion worth of debt or something along those lines, and they get called on their debt, and then they have so much debt that could that be possible? I don't know. I'm just kind of throwing that out there. I've never thought this possible before it actually
I just think equity holders would go, equity holders just go to zero.
Yeah, they just go, they're out.
Companies go bankrupt, and then, the equity just goes to nothing.
Because, you can declare bankruptcy on a company, not on a commodity,
The lending guys usually step in front of the equity guys in those scenarios anyway, right?
Yeah. From a covenant point of view, right? Because all the guys that own the bonds, usually equity holders are generally last in line. So all the bond vultures will come around and, they'll take all the paper clips and the chairs out of the, out of the company before the equity holders get anything.
Yeah.
There you go. Uncle Mike's strategy hour this week.
There you go. Negative pricing in commodities. Who'd have thunk it?
Yeah, it's one of these weird, aside from the complete madness that is that, Uncle Mike, anything else on your radar today?
In looking at it, overall, I would say that the other thing I was just going to mention today, this is a Ray Charles market right now. And by Ray Charles, you're probably wondering where on earth is he going with this. Georgia on my mind. Georgia is going to be the first state that has a significant population to open things up. They're going to do it starting tomorrow, and then pretty much everything will be open next week for them. And I think that how Georgia fares with their population and to see if they have significant upticks in their in their testing, or I'm sorry, in their coronavirus, I think that's going to be a big indicator for not only the markets, but just for our country and our economy in general. So definitely watching Georgia.
And someone's watching you guys because you guys are getting messaged like crazy. So whoever's getting all those frequent messages, you're driving me nuts. You're killing me here. You're killing me, Smalls. All right, let's move on to what's going on here in the broad indices really quickly here. Again, this is one of those days where if this had happened a month and change ago, probably would have driven a lot more paper. And it looks like we're getting some of those gains maybe back a little bit now out there in the broad indices. But still not a lot of paper in the broad indices coming into showtime. We're actually coming into as of a few minutes ago. We saw the VIX at about 154,000. The ADV, like we said, now back below 500,000. So different scenario than it was not too long ago. SPY at about 2.5 million as of a few minutes ago. The ADV a little bit shy of 6 million. The S at about 527,000. The ADV about 1.4 million or so. The Qs 414,000. The ADV about not quite 750,000. And the Russell, at least the IWM version, at about 346,000. The ADV a little bit shy of 660,000. Let's go on out to what's lighting it up in the individual names out there today. Let's see, top 10 cost you actually pretty decent amount of paper to get into the top 10 today. Cost you 187,000 contracts to bust into the old top 10. That gets you to our friends across the street here. Boeing, number 9, Facebook at 190,000 out there. Number 8, Zoom back in the top 10, 192,000. Number 7, the old Netflix, just blowing the doors off subscriber numbers lately. No, go figure. I think everyone literally in the country has to have Netflix at this point. It's almost a physical impossibility. Even if you don't have internet, you still have to have Netflix. It's just that widespread. 195,000 contracts for number 7. Number 6, Tesla, all the way down number 6 with 209,000. Number 5, a newcomer to the top 10. This is Whiting Petroleum, ticker symbol WLL. 211,000 contracts. This is the stock that had nearly doubled today. It's up 80% right now, up to a whopping $1.50 out there. So the Viceroy was on. He would say this thing is purely an option, the stock, and it's certainly behaving like it. It's moving quite a bit. A lot of gamma to this stock, as you might imagine. Number 4, AMD here, 213,000. Number 3, Snap, 213,000 for AMD. Number 3, Snap with 218,000. Number 2, our old friend Gilead, they of the perhaps underperforming drug fame, 246,000. That means number 1, it's got to be our old friend, the fruit company, 426,000. Pretty active day out here for the fruit company. Let's just see really quickly where they're hanging their hat right now. Up about not quite $2, so not a huge underlying movement day. But let's see. And intraday, they had a pretty decent high. They got up to about almost 282 intraday, so they're off that a little bit. So a little bit of a swing out there in Apple, translating into 426,000 contracts out there. Really quickly, let's just get on it really quick because it is indeed earnings season. Everyone's so fixated on crude right now. Maybe forgetting that, but we had some big names popping off this week. Speaking of crude, Halliburton on Monday, IBM, Equifax, Ally. Our buddies over there at Ally on Monday. Tuesday was Coke, Netflix, Snap, and Chipotle. IB as well. They had a bit of a boo-boo with this WTI debacle. Again, we'll get to that more on TWIFO, I think to the tune of about $88 million. Wednesday, they have Delta. We had Delta, Kimberly-Clark, NASDAQ, TD Ameritrade. Thursday, today, after the bell, so we got Domino's, Southwest Airlines, E-Trade, Lilly, Dow Chemical, WWE, interesting one, E-Trade, Intel, Friday, Verizon, and Amex. Let's look really quickly. Again, we have those earnings move results reports coming at you, courtesy of our friends over there in Orat's land. Let's look at some earnings. Got the results report here as of right before showtime here. Let's see some names that are popping out. Lilly, we were talking about them. They were before the bell today. They were at 156.71 going into this report. And let's see, they were pricing in about 3.1%. They delivered about 1.5% to the downside. So underperforming there overall from a net straddle perspective. Xilinx, they were yesterday after the bell. They closed at 90.60. They were pricing in 6.3%. They delivered 5.3%. So yet another underperformer out there as well. There's a whole bunch of these listeners. We can go on for hours. I encourage you to check it out for yourself. The earnings move results reports. Their move reports are getting huge now. There's a lot of names popping off. We have Intel today. Let's look at Intel really quickly. Intel, $60.10 as of the time of this report. They were pricing in $338. That's almost exactly in line with their previous moves, which are about $333 on average. So not a lot of juice or wiggle room either way really out there in Intel land. WWE after the bell, they're at 39.5 or so at the time of this report. They're pricing in $3. They've moved $2.64, so a little bit heavier on the WWE side. That may be bucking the trend out there. A lot of the other names that seem to be kind of lighter on the earnings front. You want that analysis for those names and a whole bunch more, listeners. TheOptionsInsider.com is the place to go. Meanwhile, we have to go right on into our next segment. It is time to go into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. This is where we unleash our Eye of Sauron upon the options market, see what we find. Maybe we'll pay off some fun ones from the past here as well. Let's kick it off. What we're finding today, we said individual names are doing all right. Not a huge, crazy, aberrant prints floating around out there. Let's kick it off here with, if it's not a newcomer, it's the first time we talked about them in some time. This is First Energy, this ticker symbol FE. This is a utility out of Akron, Ohio. Ticker symbol FE. Trading right now $43.20, off about a little more than $1 or almost 2.5%. This is the name that, a year ago was trading about, not even $3 shy of where it is right now. It's about $40.75. And it slowly drifted and rallied all the way up over the course of the year, up to about 52, which again, this is a utility. That's not bad performance for a utility. Utility is usually pretty sleepy. Place you park your cash, you get your divvies, everyone's happy. But they rallied up here almost over 10 handles over the course of the year, so up until February 18th. Then we all know what happened. The world got lit on fire, and they sold off down to $33.19. So pretty much exactly almost $10 lower than where they are right now. Then they've rebounded about $10 since then. Actually, they got up as high as $46.21, so they were about $3 north of where they are right now. I'm giving some of that back of late. So it's been an interesting little V out here for First Energy as well. Let's see what our Eye of Sauron is telling us out here. That's worth noting. They do have earnings coming up. They actually looks like they're today after the bell as well. And we've got looks like some call paper out here in June. These are the June 47s going up 6,450 times for $1.40. These things were $1.40 at $1.75 when they went up. So someone looks like maybe perhaps taking a little bit of the upside off the table, saying, you know what, these are pretty juicy. They got a little bit of earnings juice baked into them. Maybe a little bit of next cycle baked in there as well going out to June. And so they're deciding, I'm going to take my $1.40 and run with it, and I don't mind dumping this stock up there at about almost 48.5. That's above the near-term high here of the last few weeks. It's not above, obviously, where they got to, but still a pretty decent level for this underlying. And if it doesn't happen, I get a nice $1.40 all to myself, Mr. Rock Lobster, to keep in my hot little hands. What are your thoughts here on, looks like a little bit of earnings overwrite in action in a usually sleepy utility. These days, not so much out here in First Energy Corp, sir.
Well, let's just see here about this First Energy. So here's another thing with utilities, right? Is they're like the last man standing, aren't they? If you think about it, right? They're like, okay. Well, and another thing too is if you think too is when are you ever going to see the volatility in a utility you're seeing right now? You know, like so the June 47 calls in FE, right? When are you getting the kind of vol you're getting right now? You can actually get $1.40 for those things. At like a 43 vol. When the heck are you ever going to see 43 vol in a utility? I'm looking at it like, holy guacamole, Batman, you know? I think, to be honest, this is like everybody's stuck in their homes, you know? I think utility companies are going to still be utility companies, and now all of a sudden, you know, your whole yield profile of these trades are quite a bit different than they used to be, right? So another thing, talking to students, and we have a lot of mentees coming in, and you know what I'm trying to tell you is, it's not necessarily trying to be greedy. You know, you're trying to buy the bottom of the market. And I don't want to miss it, but you know, what's long as just taking your money and making 8% yield for a couple of months, right? what's wrong with that? Worst thing happens, you get the stock at a much lower price. So I think, 40 volatility, if you want to do some investing, you just get the yield, get the 8% for, a couple of months. Just take some dough. Like, really, the SPX is going to rally another 10%. I mean, it could, right? But it's not like you're going to miss out on a whole lot. And, you get good premium for selling this stuff. So I'm all about, I think the buy right now is a great idea. Selling out of the money puts. I've got 1x2s all queued up, trying to get fills here today. So, I don't know where we're going to be 6 months from now, but if I could still buy stocks at a 25 or 30% discount and pick up decent premium, why the heck not? So I like the idea of why not sell a call against a utility at 47 vol?
There's certainly worse trades that we've seen, so we'll put this one in our to be watched category. We shall come back, making usually sleepy div plays a little sexier and a little bit more juicy on the div side. So there you go. Overwrite in here, and if you'll see what else we've got next. Next, we're going back. If that was too rich for your blood, listeners, around the 47 handle, don't worry, we got you covered. We're going out to Hecla Mining now, ticker symbol HL. They are indeed, as the name says, a mining company based out of Idaho. And they're trading a whopping $2.50 right now, up a dime, so a little over 4%. This is a name that's, as you might imagine, kind of been all over the place. A year ago was about almost a half a buck shy of where it is right now, a little bit right around the 2 handle. Then it sold off to $1.39 in May. Then it kind of rallied again to 2 and back down to $1.50 again in August. Then it started an upward swing that culminated around early January at about $3.35 or so. So looking pretty good there. Then it sold off a bit before all this madness happened, just on its own accord here, down to about high 2s, and then hovered on the 3 handle for a while, then spiked back up in Feb about 3.5. Things looked like they were looking pretty good, and then we all know what happened later, February and beyond. This thing took it on the chin down to $1.69 again, and then let's see, the 52-week low was actually $1.21. That actually came in May, though. It didn't reach its 52-week low. Got close, but it didn't get quite down. It got to about $1.66, looks like, or so on those levels there. Then it rebounded again to where it is right now, $2.50. Let's see. So, again, this stock is an option, but let's see what the options are trading nonetheless. And, this is not what I expected. Usually on these kind of names, they're popping up. People are loading up to the upside to keep the party alive. No, we got someone deciding, I guess, these gains are perhaps too precious. He cannot risk losing any of them, except for the 24 cents he's paying right now, because he's buying the May 2.5 puts. So exactly at the money puts. We're exactly at 2.5 right now, listeners. 4,010 times for 24 cents, lifting the offer over there on the NOM. Their earnings are on, let's see, they're coming up on the 7th. So there are earnings baked into this cycle here. So Mr. Rocklasser sounds like someone likes himself his juicy little gains here and is willing to shed a whopping 24 cents. So about 10% of the price of the stock to lock in those gains through expiration, or excuse me, through earnings. Is that your take as well? No, this is like your favorite trade ever, is it not?
Well, yield is yield, man. Yield is yield. So what are they? He's buying these puts because he's worried the stock's going to go to zero. Is that like, is this where we are at $2.50? You know what? Maybe he saw the CL settle and he just freaked out and said, you know what? Hey, the stock can only go to zero, but maybe I can exercise for a negative. I don't know. So let's just call this is I've seen a lot trading options, and I know I've traded options long enough to know that I'm not going to see everything there is to see, but I've seen a lot. So I certainly have seen some new stuff in this last cycle. Like the last 2 months, oh my gosh, because crazy stuff. It's crazy stuff. What else can you say? I got to buy the 2.5 puts now because I'm worried about zero.
Yeah, so apparently he's willing to shell out a whopping 10% of the value of his position to take this off. Speaking of taking off, we got an underline. We got one we could talk about that our people are watching. We can come back to this one on a day that's a little bit sleepier. Let's get to some of you guys here. It's Thursday. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's get to it. Mail Block portion of the show where you guys take the reins, your questions, your comments. Let's see. Yeah, I mentioned earlier at the top of the show, from our last show, the gold star goes to our listener in the live chat there, Tony, who had the forethought to ask at least whether the front month in WTI could actually go negative. We all said pshaw. Uncle Mike said no way is that theoretically possible. Uncle Mike, I think those were his exact words. And and look where we find ourselves a few sessions later. Not just negative, but they were super negative for a while there. We got a buddy. I think this is one of your listeners, actually, or one of your users there, Mr. Rock Lobster. His name's Hawkeye. Hawkeye in the chat here. He was saying, I think on the last show, he said, "Listen, people all over sending in these book title ideas." Now he says, Uncle Mike's next book should be called, quote, Holding, a.k.a. being a perpetual long in a down market. Oh, I don't know. Uncle Mike, sounds like Hawkeye throwing a little shade at you there. What do you have to say here for this, your latest suggestion for your book title, sir?
Well, first off, in my aggressive option trading, I went to cash when we went negative. So I don't know if a lot of people can say that, but I did. And so this market goes back to positive. We'll pick up where we left off. And if we're not positive by the end of the year, then I'll start over next year being far ahead of the market. So I'm very happy about that. And in terms of buy and hold, well, it's a very good strategy that has been proven throughout time. And if you have time to buy and hold, there's really no one that can argue with that over the long term. The S&P has a track record that no other major asset can match over the course of the last 100 years. And in regard to holding, my hands were inside the frame, ref. It was not holding.
There you go. Looks Hawkeye throwing a little shade Uncle Mike's way. That's funny. Let's break away from all this negativity here for a little bit. Crude oil madness, negative, literally negative in some products out here. Let's have a little fun. We asked you guys this week just to kind of get you out of this morass everyone's in these days. Bad drug news, everything else, bad pandemic news. Let's break it up, a little bit of fun. We asked you, there aren't many movies set in the old world of floor trading, the world that is now literally gone. Maybe it'll come back. We're right now literally gone. We managed to scrape together what we think are the highlights in a very small universe. But what are your thoughts? What do you think is the greatest quote-unquote floor trading movie of all time? We gave you three choices. You left it open for you guys to send in your thoughts as well. We gave you Quicksilver, little-known Kevin Bacon bike messenger / Pecos trading movie. If you weren't a trader, I don't think you had any reason to ever watch this movie. Then you had Rogue Trader, some of you might know, Obi-Wan, dabbling as a floor trader out there. And then we have Trading Places and then Other. Mr. Rock Lobster, what is your vote and what do you think our audience is voting for?
It is funny because I know all the guys that were in the Quicksilver movie. So
yeah, all the Pecos guys know those people, yeah.
I mean, they're all Pecos guys. I know all those guys. So I'm just gonna. Oh God. Jeez. There's not a better movie than Trading Places. So you got to go Trading Places. But that the Pecos, that would be my number two. Okay, that would be my number two.
Yeah, everyone has a little bit of historical fondness for the Quicksilver, just because it is. In fact, your buddy, Famous Dave, chimed in. He said, "You have to say Quicksilver since my friends are in." I used to trade with some guys on the Seaball who were former Pecos guys. And I used to hear the stories all the time. Oh, I was out there the day they did that and they did this. By the way, one of my favorite scenes in any trading quote-unquote movie history is when Kevin Bacon walks onto the floor of the Pecos with a visitor's badge on like the busiest day, earnings, whatever it was, and just starts slinging size on a visitor's badge. It's great. It's fantastic. Go see it if you haven't seen it, listeners. Randy G saying, looking good, Billy Ray. Feeling good, Lewis. That's, of course, I'm guessing he sends his vote in for Trading Places. Mr. Uncle Mike, do you have a vote, sir? And what do you think our audience is voting for?
I mean, I think it has to be Trading Places. I mean, I even referenced that movie myself recently when Eddie Murphy and Dan Aykroyd are standing in the trading pit, and Eddie Murphy looks to Dan Aykroyd because he's ready to trade frozen orange juice, and he goes, now? And then Dan Aykroyd goes, not yet. And that's kind of how I'm feeling about this market right now. So got to go with Trading Places.
Yeah, our audience agrees. It's really, the other ones are fun, silly, but the Trading Places is a decent movie on its own. It could stand on its own without the nuance of having to come to it to watch a trading. But by the way, speaking of nuances, go watch Trading Places again. Go watch the scene at the end there where, spoiler alert, they're reaping all their profits on the FCOJ contracts. Go watch Eddie Murphy in the pit attempt to try to trade. It's fantastic. He has since come out later and said he had no idea what he was doing. No one told him what to do, and it shows in that scene. If you watch him just trying to effectively fill orders and everything, it's pretty hilarious. So a fun little nugget, if you could find that out there. We are now, 71% so far for our fun little poll about Trading Places. Meanwhile, we got to keep on rolling. Tell you what we're watching for the rest of the week. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, there's so much to unpack here to watch for the rest of this week. Obviously, everyone's still watching the delicate dance that is out there in crude oil. Never before has crude oil been on so many lips, perhaps since the crazy days of the late 70s when folks were lined up trying to get gas. Not since then has crude oil been dominating the headlines, and now it's in completely the other direction. Look at those days and look at now. Anyone even think? People who were talking about peak oil not too long ago, even think the notion that we would go negative was just absurd. But that's where we find ourselves these days. Of course, the now renewed tensions between the U.S. and Iran giving a little bit of a lift out there, because none of that's going to matter if we can't get any storage here and any demand here. If no one can drive, prices are getting close to $1 a gallon down at the pump. It doesn't matter. No one can benefit from this because no one can really go anywhere. So we're in this kind of worst case scenario on all fronts. All it is right now is pretty much a drag to the broad economy without any of the broad stimulus effects that it usually has out there. I mean, it can help transport a little bit. That helps. But outside of that, the demand for that obviously not able to lift what's going on out there. And, of course, we still have a bunch of earnings popping off, including today after the bell, a bunch of names popping off later, including Intel, WWE, Capital One, E-Trade, and a bunch more. Skechers, if you want to just lock in on footwear and forget about the broad economy. You can do that. Our reports will help you do that. TheOptionsInsider.com is the place to go. Let's go back around the horn. Let's start with the Rock Lobster, sir. What are you watching for the rest of this week?
I like all this good news. Right? I think the EU is not going to do its biggest stimulus. I don't know what they're thinking because I think they have worse problems than anybody, to be honest. They got hurt the worst, I think. So their stimulus package might not be as big. That could be troubling. At this point, you just got to lie. Say, we're going to do it big. Also interesting, more stats and more numbers. Apparently, New York estimating that they basically 22% of New Yorkers have the virus. A lot of them are asymptomatic, or a huge number of them are. So that actually could be good news going forward. So I think, again, back to what I said earlier, I think now we're looking to see if we get out of this economically. I think the worst of the virus hopefully has passed. At least that's the way I see the market looking at it. And now we're forward looking to see what's actually going on with what kind of economy do we have left when we're done.
That's great. So all that 22% of them could have it, and they could spread it to the rest of us when everything opens up again, and all these areas that locked down early don't have it. We'll all get it. It'll be great. All right, Uncle Mike, sir, what are you watching for the rest of this week?
Well, I'm watching 2,900 because that was kind of like a 60% retracement from peak to trough in the market for the S&P. So trying to see if we can break through that. Also watching Georgia, as I had mentioned earlier. And then the last thing I'm watching is actually another trading movie, just at the trading scene anyway. Ferris Bueller's Day Off. They actually go and take a look at the trading floor in that. So I'll nominate Ferris Bueller's Day Off. I still would have Trading Places as my favorite, but let's add Ferris Bueller's Day Off to the list. That's my other nomination.
I like that. A lot of people are voting for other out here. We got 7.5%, but they're not sending in what that other should be. Give us the others. And some people have said Wall Street, but that's a movie around the markets. There's not really a trading floor scene. I think they actually mention, they do refer to options very briefly, I think in Wall Street, there is a portion where they're talking about buying some calls on one of their takeover stocks, I believe. Blue Horseshoe likes themselves a little bit of calls. So there is a bit of an options overlay, I suppose, to that as well. So maybe we can count that. I know people we're gonna send in for Wall Street, but yeah, trading movies is what we're looking for. I'll take a side nomination there, though, Uncle Mike, for Ferris Bueller's Day Off. All right. That music means, unfortunately, we've come to the end for at least this show, listeners. If you need more in your lives, and who can blame you, then don't worry. We'll be back soon. We'll be back with Twifo in about half an hour to go deep into all this crude madness, negative strikes, what the hell's going on, what is up out there. We're going to break it all down and a lot more over there on Twifo. So don't you worry. So if you got questions about that, and you got a lot of them, we got them all stored up over there. Don't worry. We're going to get to them all in a little bit, break down what the heck's going on with this USO madness, how it impacts, WTI, and all this fun stuff. But before we do that, and of course in between, if you're listening live, you get some fun crude oil madness courtesy of our friends over there at OPR, breaking down some trades and some interesting ideas out there in USO and Exxon and a bunch of other things. Stay tuned for that, and we'll be back in about half an hour. Before we do that, let's go back around the horn. Mr. Rock Lobster, we'll start with you, sir. What is cooking in the land of the pit? Maybe I say, hey, I got questions. I got questions about this crazy madness, sir. Where should I go? What should I do?
Go to we're going to launch our new mentoring series. Go to optionpit.com. We'll be talking about it on Tuesday, I hope is the date. So you want to learn about vol, you want to learn how to position for vol, you want to be like our clients who had who did pretty darn good during this whole thing. Come on, learn optionpit.com, learn how to trade some vol. There you go.
There you go, optionpit.com. Learn how to trade some vol. Maybe learn how to trade some USO while you're at it as well. Optionpit.com, the place to go. Mr. Uncle Mike, if I want to talk to you about, let's say, trading scenes in Ferris Bueller or something else, where should I go? What should I do?
Go to stcharleswealth.com, find my information there, or just give me a call directly, 630-885-0017. We'll be more than happy to discuss trading scenes in Ferris Bueller's Day Off with anybody.
There you go. stcharleswealth.com is the place to go, and we got to go as well. But we'll be back in a little bit to talk more about this crude oil madness. Don't worry, it doesn't stop there. So join us for that. If you're listening after the fact, just hit next, and then we'll see you back here tomorrow, 1 p.m. Central for Volatility Views, and then we're right back in it again on Monday for more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.